You're watching Business Incorporated live from Channels HQ. Coming up, United Nations World Tourism Organization Conference kicks off at the National Theatre in Igomu, Lagos. Tea prices at Mombasa auction fall marginally after 10 weeks. Plus, Egypt authorities confirm wheat reserves are sufficient for 5 months. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is performing at intraday. Let's start with African markets, where sentiment is negative. Like you see right behind me there, NGX continuing that downward trend there, down 0.04%. We see South Africa's GSC 72,962 points, and that's also down. And we see in Egypt there, North Africa, other markets we track, Egypt's down 0.43%, and Kenya closed Friday negative, down 0.50%. Let's move over to other markets we track in the Middle East. It's also down, also negative sentiment we see in those markets. Abu Dhabi, Dubai index in the UAE, all down over 0.5%. 10,620 points for Abu Dhabi. Dubai down 0.54%. Other markets we track in the Middle East, Saudi Arabia, that's also down 0.56%, 11,240 points. And Qatar, 12,586 points, down 0.19%. So we're seeing negative sentiment at intraday in Africa and the Middle East. Let's head over to Europe now. We see German Chancellor Olaf Scholz and Economy Minister Robert Habeck on a tour across Asia to help lay the groundwork for trade treaties that are to steer German companies out of their dependence on China. Let's get more now from DW's Chris Koba right there in Berlin. Great to have you, Chris. So which countries do the German government actually have in mind?
It is the whole Indo-Pacific region that, according to the government, should play a bigger role in Germany's foreign trade relations. Deeper cooperation would be crucial, German Chancellor Olaf Scholz said, because we all feel that the geopolitical ground is shifting beneath our feet. Mr. Scholz visited Vietnam on Sunday, and after a stop in Singapore, will travel on to the G20 Leaders Summit in Indonesia. Now, Economy Minister and Vice Chancellor Robert Habeck said at a conference in Singapore, we need to completely reset our trade policies. We need new countries, different partners. Germany wants to reduce its economic reliance on its top trade partner, China, after Russia's invasion of Ukraine, and reduction in energy supplies to Europe highlighted the risks of relying on one state. Now, regarding some important raw materials, Germany is depending almost completely on China. And that could become very difficult should Beijing escalate its aggressive rhetoric towards Taiwan and international sanctions follow. So looking of different partners, as the Vice Chancellor put it, the combined population of Southeast Asian countries stands at 2.5 billion people. There are democracies like India, Indonesia, and Malaysia, but also autocratically ruled states like Vietnam, Thailand, or Cambodia. And regardless of political systems, countries that share the same values as Germany's, well, they are hard to find. Singapore is the region's only country that's supporting Western sanctions against Russia amid its war on Ukraine. India, on the other hand, expanded its ties with Moscow, becoming a major customer for Russian oil. So far, Vietnam has become the preferred destination when it comes to looking for alternatives to China. Since March, about a dozen German companies have pledged to set up shop in the country. But political leaders there are upset because an investment protection agreement with the EU hasn't been signed by Brussels in years. That could change now, as the German Chancellor has called on the European Union as a whole to expand cooperation with Southeast Asian countries. Mr. Scholz is also eyeing stronger ties with Singapore, which he is visiting today. The island state has Asia's highest per capita income and the second largest harbor in the world.
All right, Chris, we'll keep tracking the tour. But what do German corporate leaders think, about shrinking their company's exposure to China?
Well, they do agree that there is the risk of China becoming the subject of international sanctions should Beijing's aggression towards Taiwan escalate. But there are hugely differing opinions on how quickly shifting focus away from China should actually happen. At the business conference in Singapore, which Germany's economy minister attended, leading corporate executives made it quite clear that they don't have any interest in loosening their ties to the Chinese market as quickly as the government may wish. Diversifying is key, the head of the Association of German Chambers of Industry and Commerce says, but things cannot be changed instantly. The German chancellor himself is saying that less dependence on China doesn't mean a retreat of German companies from the country, but rather increasing trade with others. But the appetite for China has been huge among German companies in the past. The share of total German foreign investment going to China has almost doubled in the past years, from 3.5% in 2010 to almost 7% in 2020. And while major U.S. companies have been quite ambitious to follow a so-called China plus one investment strategy, German corporations, as we heard, are more reluctant to look for other options.
All right, Chris, tell us what investors in financial markets will be looking at today.
They're looking at whether the rally does continue. Last week, stocks surged after government data showed that inflation in the U.S. moderated somewhat last month, which gave investors hope for less aggressive future interest rate hikes by the Federal Reserve. Now, that sentiment is prevailing today, along with hopes of a softened approach to the pandemic among the leadership in China. The country announced easing of restrictions last week, despite rising COVID-19 cases. So it is a quite optimistic start to the week, with the DAX in Frankfurt gaining around 0.5% in early trading.
Quite an optimistic start. Thank you so much. That was Chris Kober right there in Berlin, giving us the details, what's happening way over there in Europe. But thank you so much, Chris Kober. Now let's cross over now back to the National Theatre right here. We have a very correspondent there, Olumide Macaulay, going to cross over now and tell us what's happening there. United Nations World Tourism Organization. Hello, Olumide.
Hello, laddies. Good to see you again.
Yeah, great to see you again.
And today,
yeah.
So basically, the World Tourism Organization is holding this global conference, and it's gone along in the day. And the fact of the matter is, what we're talking about is that money has to be made from tourism as a substitute to revenue generators like oil and what have you. So basically, they're coming together, bringing all these three facets together to enable revenue to be generated for the country across the board. So we're talking tourism, we're talking culture, we're talking creative industries. Now, the Secretary General of the United Nations World Tourism Organization spoke about the fact that 7% of global trade was accounted to tourism prior to the pandemic. So there's a need for recovery. And one of the themes for this conference is a path to recovery, so that nations around the world can recover, find a way to synergize with their ministries, their parastatals, their federal and their local governments, the private and the public sector, to generate money through tourism for the countries.
All right, Olumide. Well, diversifying the economy is a major talking point right now in Nigeria, and tourism is one we need to explore. But I don't know if you have anyone to talk to there, if you have any interviews?
No, but we do have information as far as the creative industries is concerned. We know that music, we know that film, we know that fashion even generates quite a lot of funds for the country, as far as what the Minister of Information, Lai Mohammed, spoke of, in the billions and in the trillions. So he talked about looking a way to harness this money in a productive and cohesive way to be part of the money that's coming in for the country. So this has to do with symposiums, has to do with workshops and interactive sessions, bringing the creative minds of this country together so they can look for a way to forge a path ahead.
All right, I'm sure a lot of conversations still, ongoing at this point, and we'll still, be covering what's happening there tomorrow. Thank you so much, Olumide, for bringing us up to speed on what's actually happening there.
Thank you, Laddie.
That was Olumide Macaulay, there, our correspondent, right there, live at the National Theatre, bringing us up to speed. Let's move on to other markets now. We see Hong Kong stocks led gains in a mixed Asia-Pacific session as Japan's benchmark index was dragged lower by tech giant SoftBank Group. The Hang Seng Index in Hong Kong rose 1.71% in its final hour of trade, mostly boosted by property stocks in mainland China. As you can see behind me there, Nikkei there, down 1.06%. The Shanghai Composite, 3,083 points, down 0.13%. And we see HSI there also up in the green. Kospi, that's down 0.34%. And the ASX 200 there, down 0.16%. So we're seeing mixed sentiment in that market. Well, we see the SoftBank there plunged as much as 14% after its Vision Fund reported further losses to close the session at 27,963 points. And as we said, the S&P ASX 200 Australia lost about 0.16%, as you can see behind me now. Moving on to other markets, we see the Wall Street's moving on to Wall Street now, we see the S&P posted its biggest weekly gain. It's in almost 5 months on the back of easing, inflation data. We did get that CPI data last week there, but we see the futures there, the Dow Jones Industrial Average there, down 0.30%. So we're seeing red for the futures there. S&P 500, 3,983 points, down 0.42%. We see the NASDAQ, 11,763 points. They get that big jump there from 10,000 points on that nice CPI data we got. It's down 0.72%, but we'll still be watching investor sentiment because everyone's looking out for that the housing report coming out later this week to see how much the Fed rate hikes has actually impacted that housing industry. All right, now let's move on to the global oil market. Now we see oil prices paired earlier gains as and fell, dragged down by the firmer U.S. dollar and record high coronavirus cases in major Chinese cities that dash hopes of the reopening of the economy of the world's biggest crude importer. Contracts for Brent crude and U.S. West Texas Intermediate crude had edged up nearly 1% earlier in the session, but later reversed their trajectory and headed lower. Brent crude futures were down 60 cents to $95.39 a barrel after settling up 1.1% on Friday, while WTI crude futures fell 70 cents to $88.27 a barrel after closing Friday's session 2.9% higher. All right, let's look at what's happening in metals market now. Gold prices slightly retreated today from a 3-month peak hit in previous session as a dollar, and U.S. bond yields rose after a top U.S. central banker warned that the Federal Reserve is not softening the fight against inflation yet. Spot gold is down about 0.5% to $1,762 per ounce after hitting its highest since August 18th. On Friday, U.S. gold futures eased 0.2% to $1,766. Gold prices posted their biggest weekly percentage gain since March 2020 last week after signs that cooling U.S. inflation lifted hopes that the Fed could be less hawkish on rate hikes. All right, we'll take a break now. When we come back, more stories from the African continent. That's in a moment. Stay with us. And now to our next conversation. The fall of cryptocurrency exchange FTX has drawn numerous comparisons to the collapse of Lehman Brothers, which sparked the 2008 financial crisis. Well, FTX expanded its business into West Africa, gathering users in Nigeria, Ghana, and East Africa, talking about Kenya. But what can we expect for regulation, and how can users get their funds that are stuck on that exchange back? Let's talk to Prince Wafru, now partner at the Law Suite. Join us via Zoom. Great to have you on the program.
I'm glad to be here.
Yeah, great to have you. So a majority of users of the exchange have their funds still stuck there. And I'm wondering if users have some kind of legal backing, to actually get their funds back.
Well, thanks for the question. Well, first of all, let me say that as a strong believer in the blockchain technology, my heart goes out to those who have lost their funds or who are about to lose part of their funds. Now, to your question, the way it works in practice is once the company files for Chapter 11 bankruptcy, I mean, the state automatically takes over the company. And what it then means that the creditors, who include, of course, the users of the platform, we have to wait for that process to take its course. And I can assure you, it's not an easy process. It's quite complicated. But there's hope that, I mean, could lead to the users recovering part of their funds. One thing is clear, though, bankruptcy proceeding, like I noted, is quite complex. And you recall, Ladi, that this is an area that is still evolving. Even with lawyers, we are still trying to figure out how some of these things will play out. I mean, not like in traditional asset class, where the law appears to be more specific on what to be done. So, but I mean, from the information available to the public, the filing that has been published by major newspapers, including, of course, channels, FTX indicate that it has over 100,000 creditors, assets in the range of 10 billion USD, 50 billion worth of assets. Then, of course, liabilities. What I noticed is that by their filing, they have indicated that both their assets range and their liabilities range are almost at par. But you know, it's more than just that filing. We need to understand what those assets are and what will be the value of those assets at the point of disposal. Currently, the crypto market is undergoing what we call crypto winter. There's a lot of downturn, occasioned partly, of course, by the global recession. So, but I mean, we can only hope for the best. Thank you.
All right. What do you think U.S. and international regulators have in their playbook to actually protect users of that exchange right now?
Well, back to the point I made earlier, the U.S. has a system that works, and we know that crypto has that global outlook. FTX itself is based in Bahamas, of course, with the U.S. subsidiary. And I imagine that there'll be a lot of collaboration among the various jurisdictions. We hear that the U.S. has started investigation, Department of Justice and the Securities and Exchange Commission. The whole idea behind this investigation is to ensure that these assets are not frittered away. They should be able to recover as many of those assets so that these users can, at least the hope of recovering their assets will be something more realizable. So, I mean, there's current investigation going on, and we are just watching the space.
Isn't it a little fishy that after the whole collapse of the exchange, then news comes out all of a sudden that the exchange has been hacked and most of the funds taken out? Isn't there some kind of imbalance there?
Yes, and I'm quite surprised of myself. Again, it goes to show why we need regulation in this sector, because a lot of unethical practices going on. If you recall, this Sam Bankman-Fried, the founder of FTX, has his hands in several previous crypto firms that have collapsed. You hear of Voyager, you hear of Celsius. These are crypto exchanges that have also collapsed in the past and somehow tied to this same founder. So I think investigation will reveal most of the underlying issues behind some of this development.
And looking at what's happened right now, we still have other exchanges out there still, claiming to be solvent, at this time. How can users actually, know which exchange can actually stand the test of time and not run away with their funds?
again, it's a difficult question, but you know the way this thing works, which again I take the blame because we the stakeholders, we celebrate these big names, we celebrate the big players in the industry. Nobody takes time to really look at the underlying infrastructure that undergets some of these projects. And at SIBAN, stakeholders in Blockchain Association of Nigeria, where I belong to, we come up with what we call code of conduct for virtual asset service providers, which will guide the stakeholders in this sector, that's the people who are running this project, to guide them so that they have what we call resilient and sustainable projects. At the moment, there are a lot of exchanges. Of course, I'm not going to mention any. But what you realize that most of these exchanges that have fallen off in recent times are centralized exchanges. If you go back to the philosophical basis behind cryptocurrency, as espoused by Satoshi Nakamoto himself, or himself, I don't know whether it's a man or a woman.
Right.
The idea is this has to be decentralized. But we've started seeing a lot of projects being centralized around few individuals. So perhaps for you to determine whether a particular project is sustainable, you have to look at a lot of factors. Who are those behind the project? What is their antecedent? I mean, look at the white paper. I mean, a lot of factors need to be taken into consideration here. But again, I'm not going to offer any recommendation in that.
All right, but looking at, you know, we have the centralized exchanges, we have the decentralized exchanges. Do you think this is the time to shine, talking about the decentralized exchanges?
Oh, yes. Again, each one has its own advantage or benefit. Of course, sometimes there's a trade-off between security and efficiency. Those who project these centralized exchanges talk about in terms of scalability. I mean, it's easier. Of course, when few persons are taking decisions, you know, things move pretty fast. Unlike when you have a community coming together to decide on an issue. So, but in terms of decentralized exchanges, they are more secure in terms because there are a lot of people scrutinizing what you know. But again, it's a balancing act. But at the end of the day, even if you have to build a centralized exchange, there are a lot of principles that should guide your project.
Okay.
I mean, like even the traditional companies, you see things around corporate governance, prudent risk management, and a whole lot of issues around consumer and investor protection. Once you have those things embedded in your project, I mean, it doesn't really matter whether you're building centralized or decentralized.
All right. Well, we'll keep tracking to see how it all plays out. Thank you so much. That was Prince Nwafuru, partner the Law Suite. It was great having your perspective.
Thank you very much. I appreciate it.
All right, now let's move on to other stories. Now, we see tea prices at the Mombasa auction slid marginally, but held within the government-set minimum price in this week's sale. Data from the East African Tea Trade Association shows that a kilogram of tea fetched about $2.44, down from $2.47 that it achieved in the previous sale. This marks the first time in the last 10 weeks that the price of beverages declined, ending a streak of good performance that was being witnessed. Ministry of Agriculture set $2.43 as the minimum price for a kilo of tea for all the Kenya tea development agencies. And the Minister of Supply and Internal Trade, Ali Mosley, says Egypt has sufficient strategic reserves of commodities, including wheat, to cover the country's needs for 5 months. The Minister said this at a meeting with the Prime Minister to discuss the situation regarding the country's basic commodities reserves. The Minister further said that the country's reserves of cooking oil and frozen poultry are sufficient for 4.8 months, while the meat reserves are sufficient for 12.6 months. All right, that's it on the program. That's how your money performed at Intraday. Thank you so much for watching. Remember, you can watch this again on our YouTube page. Just flip over to YouTube, search for Channels Television, flip over to videos. You can watch all our production. Thank you for watching. I'm Ladi Williams. Bye-bye.